Hello everyone, this is a very important video because you know what today is? Today is earnings day for Tesla. So everyone is looking forward to this big event. I want to take the time in this video to give you my strategy for earnings. I think it's a good strategy. We are focusing on generating alpha around a Tesla core position here. I'm throwing in a new additional strategy that I'm introducing now that we are entering into 2025 in earnest, that adds to my original alpha churn strategy with short selling puts and calls. And we are adding the alpha attack strategy, which is long calls. This is all around the core position. So this will be a video about how do we benefit from these earnings and what do we actually tactically do here. So really pay attention. This is going to be important. I want to start off this video with a bigger strategic overview over the markets so we understand where we stand here, and then going into Tesla technicals and see what that all means for us. So here we have the NASDAQ and the S&P, right? So blue is NASDAQ, yellow is S&P. I don't want to go too deep into that, but you have a 1 year perspective here. You see this is a nice uptrend since the election. Here's the election. We see building a base here after this little run up. And when you look at the S&P, I don't know if you follow Fundstrat and Tom Lee, he is basically saying if we are exiting January, which is this week, if you're exiting January above roughly 5,900, we would be in a very good position to have a positive year. And he believes that's going to be the case. I believe that too. So unless something bad happens, let's see. We have a lot of meetings today and tomorrow. But I think we're going to hold probably over 5,900 easily. And if that happens, there is an 89% chance that this is going to be an up year. And the thesis that Fundstrat has is that in the first half of 2025, we're going to go up a lot. Then there will be a little correction. And then we are, pushing it over the finish line in the end. So that means we are entering now a very important 6 months likely bullish phase. And if we combine that, so in the macro market, if we combine that with Tesla and look at where we have Tesla, as you know, Tesla is probably entering one of the most catalyzing years of its history this year, with maybe even Optimus becoming commercial, but definitely Robotaxi with the affordable Model Q, whatever it's called, coming out. So there is a ton of fundamental positive catalysts for Tesla. I don't want to go too deep into that in this video. If you follow me, you probably know what's going on. So in combination of that first half, very bullish macro perspective of 2025 and these insane amounts of catalysts of Tesla, this is becoming very interesting. And when you look what happened over the last 6 months, since the election of Trump and Elon as the God Emperor of Earth, this run up was crazy and went all the way up to 480, right? December 17th, then very bad day for me. It went down when Jerome Powell said his stuff and was a little more hawkish than expected. So this was a very dark day here. But then it's kept sliding. But when you look at it in a bigger perspective here, this seems to me like forming a base after that big run up. And you can look up on X, there are tons of smart technical analytics on what's going on. I think the bottom line here is we are seeing the formation of a base potentially that is backed by this macro situation, which is very bullish. And on a short-term level, if you look at 1 month, I mean, we were at 428 and then it's sliding down the last 4 days. And then yesterday was a little positive. So I think we really tested the bottoms here, 380, and are now in a position where it seems like there is some form of base forming, right? Why am I saying this? I'm saying this because I believe we are at the lower level of the current channel, which makes me a little more bullish than neutral. And here you see the last 5 days going down. And that means going into earnings. You never know what happens in earnings. It's always a coin flip. But outside earnings, the situation looks pretty bullish to me. We have the first half 2025 now in full swing. January very likely positively ending for the S&P. That means a bullish setup for the next 6 months and a ton of catalysts for Tesla, plus a technical situation where Tesla could be viewed as forming a base here and wanting to go higher. So that is what I see right now as the strategic setup for these earnings. When we go into fundamentals of earnings, I don't think we will see too many surprises. Also, no one really cares too much at the backwards looking fundamentals. The funny thing is all the Tesla super bulls, Uber bulls say how dumb Wall Street is to look at all these car metrics, margins and all these things. But at the same time, the Uber bulls always make this point, oh, look, the margins are so great. They're going to be better. This is going to kill it at earnings. You can't have your cake and eat it too. So I think all these things don't matter too much. I do not believe there will be a crazy surprise on margins. I think we are all good on that front, but it really doesn't matter too much if it's like hitting expectations, being a little above or a little below. I do not think in this whole setup this matters too much unless there's some random super bad surprise. I think what matters more is forward looking. There are two things in forward looking. There's a psychological component. Is Elon in a good mood? We know from the past how important that is. I think Elon is in the best mood ever because SpaceX is killing it. He's taking over Europe. He already controls the United States. All the head of states have to call him for permission for doing whatever they want to do. And Tesla is looking very good with the Model Y having a great global launch, with the affordable models secretly being prepared for launch. The Robotaxi looking very good. DeepSeek, I commented on that as a super bullish tailwind for Optimus. So I think Elon will be in very good mood, which is very important for our earnings call. And then we have a huge number of catalysts. Now we can go through all the catalysts for earnings and which ones are most likely to be mentioned or not mentioned. Of course, the analysts are going to ask about Robotaxi. I think, and the launch date for the pilot, I think Elon's just going to say, we're on track, it's all going to be awesome. Maybe he says something positive. I do not think he's going to say something randomly negative and say like, oops, we're going to postpone the whole thing to next year. It's extremely unlikely he says that. So generally, I'm slightly bullish on this whole thing, but it's always a coin toss. But if you put all these things together, I think it's going to be a good call. Elon is in a good mood. The probability of positive catalyst is high. There is not likely a downside surprise on any kind of the key metrics. The markets are bullish. Tesla is technically bullish. So I'm gravitating a little bit more towards a good earnings call. Okay. Tesla stock price, what we see is, we see the 350 lower level. That's really a level I see for many reasons. Go into the technical analysis. It's not visible in the chart, but if you go deeper into technical analysis, Fibonacci levels and all kinds of things, it's extremely unlikely it drops below 350. I also think without any hard catalysts that 480, towards 500, there is a real ceiling here for Tesla. I think it's a show me year. I think Tesla will show us some great things. I do not think they're going to show us anytime soon in the next couple of months. So I have the feeling, even though I'm an Uber bull, I have a feeling that the bulls are getting ahead of themselves. I do not believe that we will go above 480. I don't believe we go through 500 without any very hard catalysts. And I do not believe these hard catalysts are coming in the next 3 months. Which tells us from a setup, I think 350 is very hard to break unless there's a market crash. And I think 480 is very hard to break on the upper end, which, that's kind of the range. And you will see in a moment why I think that's very important for our strategy. Because this is all about riding that wave up that is coming for Tesla, but also being smart to generate alpha and be realistic on a tactical, short-term, on technical and tactical level. That if this thing goes to 480, just, reduce your risk and your leverage because it's going to go down again until we hit this hard catalyst, and that's going through the roof. But we know this hard catalyst is not coming anytime soon. It's very likely coming in probably Q3, in my opinion. We're talking about the hard Robotaxi launch, and we are talking about end of the year or in Q3 and Q4, the probability of some crazy Optimus news will go up a lot. So that is the setup. Let's go into the trading strategy, how we generate alpha around these earnings, or at least maximize our probability. Not investment advice. I'm just sharing what I'm doing. I introduce you to the third piece of the equation in my strategy, which I call alpha attack. So my central strategy for Tesla is a core position, right? Where we just hold on Tesla. It's very important, with all these alpha games we are playing, you want to be, I'm not saying what you should, but I want to be heavily invested in a Tesla core position. And I can't talk too much about what that core position is, but when we discuss this, I always present a benchmark portfolio where we just assume 1,000 Tesla shares. So everyone can do simple math. I base everything around 1,000 Tesla shares. That is, for aggressively Tesla-focused investors, that is between 70 and 100% of your portfolio, because I believe Tesla is the best investment right now in the market. And so if you have 10,000 shares, you multiply everything with 10. If you have 100 shares, you divide everything by 10, I'm saying. So this is our benchmark portfolio. The core strategy is keep and hold, buy and hold Tesla until 2030. You want to buy and hold these 1,000 shares. I think it goes to 11,700 right now by 2030. If you have 10,000, if you have 1,000 shares, you make 11 million bucks roughly. So that's great. How we generate alpha around that is through the alpha churn strategy that you are all familiar with. I'm going to show you what my alpha churn strategy through earnings is. As you know, in earnings, I'm a little concerned about things. So let's see, here's my earnings overview. So right now we are at a 398 current share price. I actually decided to do something through earnings. Normally my strategies don't do anything, but in these earnings, I feel like pretty comfortable that these ceilings actually work out. So I'm putting on a short put position, but very limited, 5 contracts, assuming benchmark portfolio of 1,000. So as I said, if you have 10,000 shares, multiply it with 10. If you have 100 shares, divide it by 10, which you can't. If you have 200 shares, divide it by 5. So you would only take on -1 contracts. So we are selling a put option at 360. As you can see, these premiums are pretty steep because it's earnings, right? So you're getting paid 1,240 bucks for this, and you're selling a 460 call for a crazy $4.65. That's crazy. They're both expiring this Friday, and you're getting 2,325, which means you are making, I have some long puts here just to offset some margin requirements. So 320, you go way out of the money and buy these 89 cents. You buy 5, costs you 445 bucks. That enables you to actually sell these short. And so if Tesla, after earnings by Friday, stays between 460 and 360, you're taking home for the week 3,565 bucks, free money, if it stays between. So why do I like this? First of all, that's a very big range, right? So, I do not believe Tesla says something crazy and this thing runs beyond 460. If it does, well, get rid of these contracts. You lose out on some upside, but this is not going to happen too fast. So the risk is very limited, right? Maybe you lose a couple of $1,000 here, but unlikely. And if it goes to 460 and beyond, you have your core position, you make so much money, you don't even who cares, right? So I think this is a reasonable risk reward situation. As you can tell, I'm very cautious here because I never like earnings too much for these, kind of reverse straddles or whatever you call this, like short, going short these things. But in this case, I think it's justified. Why 360? That's only a 10% drop from where we are. We could hit that because I think if it does, it's such a great entry point that it's worth it for me. I'm saying if I get hurt, right? If it drops to 350 or 340 and I'm starting to lose real money here, first of all, it's not that much. negative 5 contracts, equivalent of negative 500 shares short. Uh, that will be such a crazy entry point for Tesla that it's worth it. That's how I think around these things. Very likely these two just give me the money, so I get free money. But if one gets crushed, if it gets crushed on the upside, we make such a ton of money with the core position, who cares? And also with the alpha attack strategy that I will go into in a second. But to the upside, we will be also happy. Who cares that we lost a little money here if it goes to 470? Also very unlikely. If it goes to the downside, below 360, and you start having a bad impact here, who cares? Because that will be the dream entry point for Tesla for that bull run that I expect. So I can sleep very well at night. This is a very limited exposure, and if something happens, it's good in both directions. If nothing happens, I take home a little bit of money. So that is the alpha churn strategy, but I promise you we're doing something new and exciting. We are being very cautious here, but let's go into that a little bit more. Let's make this bigger and zoom a little in so we see more. So what is this alpha attack situation? Here, I'm introducing alpha attack, which is the third leg of the position stool and the second leg on the alpha generation strategy. So we want to generate alpha around the core holding. We do this through the alpha churn strategy by selling short calls and puts from time to time in a cautious manner. Make sure it never hurts if something goes wrong in terms of quantity. But the alpha attack, here we are talking about a strategy where we are going long calls sometimes and very deliberately. So this is about buying call options. And, this is very dangerous. Be very cautious. I'm just sharing with you what I'm doing here. That adds alpha on top of the churn. The biggest mistakes you just have to avoid, and, take some courses, make sure you know what you're doing when you do long options. This is very dangerous. The biggest mistake is over allocation into long options. You have to always make sure you define your max allocation of your total portfolio. How much of your total portfolio do you want at a maximum to put into Tesla call options? I cap it at 20%. Now, you don't want to get there. This is just in certain doubling down, dollar cost averaging down situations, but you have to have in your mind what is your max allocation that you will never exceed, because options are dangerous. I'm saying 20% of the portfolio, that's the max. Never above that. You avoid, well, there are some crazy exceptions, but I will update you on these if they happen. But normally do not exceed 20%, or I don't exceed 20%. And I want to avoid ever getting to 20%. That's just my max. I want to have trades where I'm actually sticking to 10, because you only get to 20 if you have to double down a little bit or a lot. And let me explain how this works. So an alpha attack right now, I'm picking the 470 call, April 17 expiration, so 3.5 months out. And I'm saying I will never go above 20% of this thing. But we start with a very limited thing here because, there's theta churn and all kinds of IV collapse. Theta churn coming later, but IV collapse for earnings, right? You go into earnings pass, and then you get this compression of volatility. So normally I don't like to go into earnings with a long call. We start very small here with the expectation that we probably have to double down. 3% of portfolio. If we take the benchmark portfolio, that's roughly $12,000. And that is roughly 5 contracts because they cost you $23. So that's roughly $12,000. So we are going long 5 calls at 470 with that expiration. Now, when it comes to options, strategy is key. You always have to go through, in your mind, through the scenarios that might occur and make sure you know what you're going to do. And I'm sharing this with you because it's a great opportunity to together go through this, and then we see what happens. and we can learn from that. So what can happen? Scenario one, there's a crash. Crash means it drops below 360. Very unlikely, but can happen. The calls will lose 50, 60% of their value. What do? Well, that is a call for buying more, right? And because we go in with 3% of portfolio and can go up to 20%, you can double down up to 7 times here. But of course, you don't do this right away. So if that happens, you start nibbling a little bit, right? Same if it drops, not crashes, but drops. So earnings go so, stock drops to 390 to 360, somewhere in between, greater 3% drop. You start doing similar things. You're basically saying, okay, fine, it drops. Let's buy another 3% and see what happens. Oops. We will see, what exactly happens. It depends on the scenario. It depends why it drops. That will inform if we go in at a drop or crash on Thursday, tomorrow, or wait until Friday, or don't do anything because we don't trust it and it might drop more because there's some disaster, right? Then don't act. My philosophy with doubling down and dollar cost averaging with, options, if there's a crash and the stock moves against you and you are holding long calls, in my opinion, no one got ever punished for waiting a little longer, because the risk, if something goes wrong against you, that it goes more wrong against you is very high, just from experience. It always happens. You think, oh my God, this is horrible, let's do something, and it gets just more horrible. So often not doing anything is smart. Just wait until you see the white in their eyes, and then you shoot. So let's see. But the good news is we have a lot of dry powder here. The reason I like these alpha attacks, and that's the right mindset for call options, by the way, for long call options. You want to start nibbling on that stuff, and you want to always be able to sleep at night. And when things drop and go against you, you should feel good and not bad. And you feel good if you have a ton of dry powder, right? Because you're sitting there, and you're saying, oh, very good. I only spent 3%. I can do this 7 times until I reach my max. My personal philosophy is I don't want to spend 7 times. I want to spend 3 or 4 times, and then it goes up, because it's buffer. I always want to operate with dry powder buffer. I don't want to use all my dry powder. And because we have that core position that makes us rich anyway over time, we are not needy little options traders. We just generate alpha on top. Which leads me to the other scenarios. If there's a neutral earnings and not much happens, we lose a little money, but we have our alpha churn that offsets it to some extent, right? We will decide what we do in that situation, in a neutral situation, which is kind of not the most unlikely thing, right? So that's like, what do we do now? Well, let's hold and see. That's the scenario where we really have to regroup on Monday and think, okay, what do we do with our calls now? If it is positive, it starts rising to 410 to 440. I think the calls go up 20% or something around that in that scenario. You don't do anything, you ride and sell, right? Let it ride out, and we check in on Monday and see how it goes, maybe on Friday. And we have to see when we sell these. So here we don't have to be sad that we couldn't double down, right? But we take a nice little profit home. You put in 12,000, maybe you make 4,000, or maybe you make 4,000, easy. And then the churn make you 3,000. The little alpha attack makes you 4,000. So at that point, it becomes actually interesting, right? You're generating like 2% return in 3 days on your entire portfolio in pure alpha. So that's very nice. I mean, think about it. With this little strategy, even if it doesn't drop or crash where you can double down and becomes a bigger trade, you're making 8,000, which translates into how many shares? So that's 2%. You have 1,000 shares, so you get 20 shares of Tesla for free. When you're done this week, you turned 1,000 shares into 1,020 shares. Out of thin air, you magically made 20 shares of Tesla appear. That's how you have to think about alpha as a strategic investor. So alpha is not just money. More importantly, it allows you with the same amount of money to buy 1,000 Tesla shares. And when 2030 comes along, without putting in more money, you suddenly have 2,000 shares. That is the power of alpha. That's how you have to think about it. And so we don't need to get crazy greedy. If we just buy a bunch of calls with 3% of the portfolio and it just goes up, we make 20%. Well, sure, that wasn't the biggest win in the universe, but it's good. It's better than not doing it. If it runs up, well, you make 50%, even better. Of course, the home runs here are more on the downside. Tesla drops irrationally, like Nvidia did. We get the opportunity to double down. Instead of 3%, we are now going in with 6%, 9%, 12%, depending on what exactly happens there. And then it goes up, and then we are talking about much, much bigger gains. But it's also more nerve-wracking. Let's see what happens. So that gives you a little bit of a first insight how I think around these things. That is my strategy here. That's how we go into earnings. You see this is well structured, right? Our churn strategy makes sure we are taking home our little bit of reward for this week, right? We are going home with $3,565 for the benchmark portfolio. If you are lucky and you have 10,000 shares, you're going home with $35,000 this week. If you're a little poorer, right, you're going home with a fifth of that with $700. Also not bad for a weekly little bonus. The attack calls on top of it, depending what happens, will take some of that off if it goes down, but then it turns into a bigger trade. Or did they just give you another 20% of the call option positions, and so maybe double that money. So I think we are well prepared. If the alpha churn turns out to be the wrong move, that's actually good for all other scenarios, right? Because if the short call is a wrong move on the 460 level, that means we are cracking 460 by Friday. I think no one with 1,000 shares or with 100% of their portfolio in Tesla is going to complain that they lost a couple of dollars up there. If it drops, well, then it's double down time, and we can go from there. The reason why I'm like bullish on this whole thing is if it drops, it will drop for no good reason. It might drop a lot, but if it does, I can guarantee you there's no good reason for the drop, which is free money for us. So I hope that was helpful. It's going to be exciting. We have also a bunch of macro things. I'm not going into the macro analysis, but I believe the market is set up in a way where the Fed and all these things that are coming out are unlikely to generate a real problem in the market. They are more likely to generate a positive uptrend. So we will see what happens. Never boring with options and Tesla and Alpha. And I hope to see you alive tomorrow.